Good evening and welcome to this live Ask Me Anything About Property Investing with myself, Hussain. I'm here every Monday evening at 8:30 p.m. to help you with your property investing questions. Now, a quick caveat, I don't know everything there is to know about property. However, there is a huge amount of experience that I have that I'm very happy to share with you to ultimately help you get further faster in your property investing journey. Now, you may be watching some of my YouTube content, which is much more long form content where you'll be learning about property investing, watching some of the vlogs or some of the things I'm up to, or maybe you're following me on social media. Maybe you've attended one of our property networking events, the last one that we had a couple of weeks ago. However it is that you found me, I'm here to help you with your property investing. So whichever platform you're watching on, we're streaming on various different ones, which is Facebook, YouTube, LinkedIn, Instagram, Twitter, TikTok, whichever platform you're on. Pop a question in the comment section and we'll do our very best to answer that for you this evening. Don't leave it to the end, as many people tend to do. And as we start wrapping up, we get bombarded with questions. It's not going to be possible to get them answered then. So if you want your question answered, you've got a better chance of getting it done if you get it in nice and early. First of all, let me know you can see and hear me okay. Let me know where you're watching from. The sound is clear. You can hear me okay. We're just trying something different with the lighting. I know we've got a very slight flicker on the screen behind me, so apologies for that. And let's get our first question up on the screen whilst we're just waiting for some of the comments. So our first question this evening is from Jamie on YouTube. Hi Saj, I hope you're well. A property that is unmortgageable, so a cash purchase, how can I ensure I don't overpay as we are in a booming market and it needs a heavy refurb, lots of money tied up? Well, Jamie, you'd calculate your figures based on what it's worth to you. So for example, what it's worth to you might be different to what it's worth to me, may be different to what it's worth to somebody else. So you need to work out what that property ultimately is worth to you. So for example, if you're going to renovate it and say flip it on for a profit, you need to start with a final figure in terms of what you think you're going to be able to achieve for that. That's based on your research, your calculations. Yes, you're going to take some guidance from the estate agents in terms of what they think is possible. As you said, it's a booming market. Sometimes they might be a little bit ambitious in the terms of the figures they give you. So you've got to be realistic at the numbers you think, what it is that you'll be able to achieve for that property. You've got to minus what profit you want to achieve out of it. You've got to minus what costs you think you're going to spend on the property. And of course, the figure that's left is what you're going to be paying for the property for that purchase. And if you wanted to, let's say you're going to do a BRR strategy where you're purchasing it, refurbishing it, renting out and refinancing it, i.e. keeping it in your portfolio, and you wanted some more certainty about what the end value might be, you could go with a surveying company that you'll be using to do the end mortgage with, to get a guide in terms of what they think it's worth now versus what they think it'll be worth once it's complete. And when a property is unmortgageable, remember you need to be able to make it mortgageable. Sometimes it could be something minor, like it just needs a new a kitchen that's functional in there, and it is even possible to get these things done before you purchase. So by the time you purchase, it becomes mortgageable. So for example, you exchange contracts, you get a key undertaking, you go in, you do the work, you get it mortgageable. By the time you complete your purchase, it's actually ready and mortgageable that way as well. So there's a few things there you can do, Jamie. I hope that gives you a few pointers. So let's get our next question up on the screen. This is from Adi on YouTube. Hi Saj, what's the best strategy for a new build? What's the process to get planning permission, start building? So with regards to best strategy, I'm not sure what you mean in terms of what's the best strategy for new build. Ultimately, with new build, what you're doing is you're acquiring a site that you can develop into new homes that don't exist right now. And if you're building out of the ground as brand new, you might have to demolish, clear the site. There might be a clearance cost. Sometimes it could be a site that's already cleared. For example, one of the ones we're looking at now used to be a petrol station many years ago. And the petrol tanks are still in the ground, although you wouldn't be able to tell if you were just looking at it. So there's a cost of being able to remove that. There sometimes can be some tax benefits, land remuneration, even get it pronounced correctly in a moment. That can assist you, but ultimately you are looking for a site that you can build something new on and you're going to sell it for a profit. So very much like I was speaking to Jamie earlier on, I would suggest starting with the end figure in terms of what you think it's going to be worth. What's the final value of that property going to be? How much profit you want to make on it? And then how much is it that you're going to spend in terms of building it? And with the figure that you're left with is what you can afford to pay for the site. Now, when it doesn't have any planning permission, often it's worth significantly less. So you need to think about what's the your level of confidence in getting planning. If you've not done this before, I certainly wouldn't take on any ambitious projects. I'd either try and work with somebody who's more experienced, or make sure you get a good team of people around you that know what they're doing, that can help de-risk the project for you. I have some videos on my YouTube channel where I talk about developments and costing of developments and planning permission in more detail. So make sure you have a look at those as well. So let's get our next question up on the screen. This is on Instagram from Trim1. How to start to be a developer? I think that might be very similar to a question that we were just answering a few moments ago. In terms of, it depends ultimately what you would want to achieve. So sometimes when people talk about developing, people might be referring to buy a house, refurbishing it, selling on for a profit. Some people might refer to that as developing. I tend to talk about developing in the sense that where you're building brand new homes that don't exist right now. That could be an existing building, a big commercial building, for example, you're taking and converting it into, say, several residential apartments. Or on the other hand, it could be that you've got a clean brownfield site that you're building new apartments or houses on out of the ground. So just as I said earlier on, firstly, if it's your first project, you want to make sure that you're not taking on something that's too big. For instance, if it's your very first project, you don't really have any experience in property investing, developing, I wouldn't start with building 40 brand new houses. That can be quite ambitious. What I would do is start with a smaller project. The other thing I would do is maybe look to surround myself with people that are much more experienced at doing these things. So for example, the first new build houses that I did, even though I had plenty of experience in renovating, converting, extending houses, it was when I did the first new build houses, I had a partner on board who's an experienced guy who'd done lots of new build developments in the past and brought that experience along, which ultimately meant we could de-risk the project. So hope that helps. So let's get our next question up on the screen from Jonathan on YouTube. Hey, Sam. I assume you mean me, Saj. That's okay. I recently been researching about buying a house in an auction. I just wanted to know what's the legal pack, what's the process of it, etc. So, Jonathan, if you're buying from auction, what that means is you need to be aware and understand what you're buying. Again, generally speaking, just as we're developing, this tends to be for more experienced people as opposed to something where you would start brand new. And if you are starting there, then certainly get some people around you that can help. So if you are familiar with property in terms of renovating them, what to look for structural issues, damp, things like this, cost of conversions, if you're familiar with those things, you can go along and have a look at the property and get a feel for what it's going to cost to get that property put right, improve it, renovate it, add value to it, whatever it is that you're looking to do to that property. But if you've got no experience of doing that, then you need to get somebody with you that might, for example, that could even be your builder. For example, it could be a project manager. It depends who it is that's you're going to be helping you. Get them to the site, get them to have a look at it and see what they think might need doing to the property. Now, of course, you can get surveys done as well with chartered surveyors. But then at this stage, you now start spending money for surveys and reports, and you don't even know if you're going to get the property. And often with auction buys, people tend to look at several different properties with a view of buying one of them. So what you're going to do, are you going to have surveys done on all of them? It's just not viable. The costs are adding up. This is why this is better for more experienced people, because they know what they're doing, they know what they're looking for. Coming back to your question about the legal packs, when you purchase any kind of property, what will happen is the surveyors will have a set of documents from the sellers that they need to review, which essentially is the terms and conditions of purchasing that property, if you like. And then you need to understand what it is that what is it that you're purchasing. Now, with an auction property, because there isn't the time from the time you agree to buy it for the solicitor review and come back to you on things, often what happens is as soon as that hammer goes down, you've exchanged contracts. That means technically you are now legally committed to buy that property. You're putting a deposit down and you're committed to its purchase. But you need to know that all the legal paperwork is all good, which is what's in the legal pack. So you review the legal pack beforehand. Now, again, if you've not got no experience in this, you've never done this before, they need to get a solicitor on side that can have a look at it for you. Just like with the surveyors, you're going to be now start paying out for the advice of professionals, but you may not end up purchasing the property. It might be several properties you're looking at. So the cost can quite start adding up quite quickly again, which is why auctions tend to work better for more experienced people who know what they're doing, who know what they're looking for, who understand some of these things and don't have to spend thousands of pounds reviewing each property, which they might not even end up purchasing. If you want a good solicitor to review legal packs, they will charge you for that, but a kind of nominal amount, if you like, compared to if you're doing a full purchase. Then get in touch with us. Just reach out to us on our website. complete the form there. We'll then put you in touch with somebody that we think can help you with that. Let's get our next question up on the screen. And just whilst we're doing that, remember we're here every Monday at 8:30 p.m. We live stream on various different platforms, which is Facebook, YouTube, Instagram, LinkedIn, Twitter. Whichever platform you're on, pop a question in the comment section. We'll do our very best to answer them. We're here for half an hour, so we're not going to be able to answer every single question, but we'll do our best to answer as many as we can. Try and avoid duplicate questions, so it's good value for everybody that's taken time out this evening to watch. And if you want to spend more time with us, then come to our monthly property meeting. The details just behind me on the screen. We had our last meeting a couple of weeks ago, which is our launch meeting after a couple of years, and you've got details just below here on the screen. So it's 18th of January is our next meeting. We don't do a meeting in December. We don't do one in August, hence why the next one is in January. So you can book onto that. It just costs you 10 quid. You spend time with myself, other great speakers are sharing their knowledge and experience with other like-minded people really that are on the same mission as you about property, learning about property and property investing. So make sure you get yourself booked onto that. We're now starting some seminars, courses, and programs as well. If you want to learn more about those, again, reach out to us, ping us a message, whatever platform you're on, and we'll get some details over. There's our social media as well. You can connect with me on any of those. So next question from TikTok, which is Shax from Southampton. What's the process to split the title of a property and how difficult is it? So you just go chunk and it's done. That was terrible sound effects there. But essentially, when we're splitting titles, what we're doing, we're taking the paperwork for a property and we may be separating it into separate legal entities, effectively, that unit. So, for example, you might have, let's say, a large property that you're going to split into down the middle into two houses. So a pair of semi-detached houses, for example. First of all, you need to get planning permission to be able to do it, so you've got the right consents to be able to operate it and run it as two separate properties. And then the legal side of that is then the solicitor will redraft the title documents, and in terms of, instead of it being one freehold, now it would end up as two freeholds. They register the documents at land registry. It's a fairly straightforward process. The solicitor takes care of it. If you are doing splitting of property, assuming there is building on there, because it could be land you're splitting as well, but let's assume it's a building, but rather than chopping it down vertically, you're starting to do horizontally. So for example, it could be a four-story building, and you're splitting it into one apartment per story, which is four apartments. In which case, now you have to have a freehold, which is the original title, and you create four separate leases out of that, which are now four new titles. So you end up with five, which is the freehold that the building sits on, and then the four individual titles that you're creating. Again, the solicitor takes care of all of this for you to make sure you've got planning permission. The architect will do the relevant drawings for you to get it all set up at land registry. So I hope that helps. So our next question is, do you think buy-to-let is still a viable strategy? Yes, it absolutely can be a viable strategy. It just depends what it is that you're trying to achieve. So for example, if you're looking for a really high cash flow right now, you're looking to generate a high income from buy-to-let, then you're probably going to find that's a little bit more difficult right now, simply because prices are quite high. Although rents have been rising, your overall yield isn't going to be massive. It could be 3, 4, 5, 6%, maybe 8%. Generally, they're the kind of figures that people tend to look at as an overall yield when it comes to buy-to-let. Now, if you are building a portfolio, say for the long term, as opposed to cash flow right now, because you're not going to get massive amount of cash flow doing this strategy in this way, and remember you're tying up chunks of cash in each one, then using something like the BRRR strategy is a much better way to do it. So what you're effectively doing, you're purchasing the property, you're buying it, you're refurbishing it, you're renting it out, you're refinancing it, and ultimately taking most of your money back out of it that you've invested in it, if not all the money back out. So what that means is you put, let's say you put £50,000 into the purchase, you purchased it, renovated it, and when you remortgage it, you get that £50,000 back out, and you've ended up with a mortgage on the property. In theory, you're using that £50,000 to go and buy another property, and you can just keep going and keep going. And this is essentially what the BRR strategy is. Again, it's not going to give you massive cash flow. You're not going to be getting rich really on the rental profit. But what you will get rich on is the long-term capital growth. Now, we all generally believe that in property, you will get long-term capital growth, i.e. the value of property goes up over time. It just rises and rises. Sometimes a little dips and crashes, but as the long-term prices rise. And in property, most people believe that, which is why they get involved in property and long-term property investing. And that is where you'll probably make really good money. So when we talk about building a buy-to-let portfolio, that's what I believe the real payday is. You're building a portfolio for the longer term as opposed to immediate cash flow. Now, there are a few things you can do to combine that. So for example, one of the things that we tend to do is combine cash flow with getting all our money out using the BRR type strategy. And the way we do that is we take a residential property, we convert it to high specification HMO, we spend a significant amount of money on that. Then we get a commercial valuation, we remortgage a property. So not only have we got all our money out, but we've got a really good cash flow on that property. But that's a little bit more advanced than a basic buy-to-let. But ultimately, I'm just giving an example of kind of things that are possible with this. So Massa, I hope that helps. Let's get our next question up on the screen, which is on Instagram. Olivia Horn by Property. If a commercial property has planning to convert to residential, how does the stamp duty get calculated? Well, at this stage, if something's got planning permission, it hasn't actually been converted. So you're still purchasing the commercial property. A commercial stamp duty on commercial property is generally lower than residential. So you're better off buying it as a commercial property. You'll have less stamp duty to pay and then convert it to residential. I think that was a question you were asking. But if not, just pop it back in the comment section. But you'd be better off purchasing the commercial. Yes, that's fine. So let's get next question up. Cash me if you can. Cash me if you can. Some super creative names here. So on Instagram, when is your next live event? So the in-person event is the next one. The property meeting is on the 18th of January. It's Tuesday. There's the details just down here. Here even. You can book onto that, sajhussain.com/networking. It's £10 to book on. At the last meeting, we had 200 people on there, completely sold out before the event. I expect we're going to sell out again before the event. So if you want to come, I just encourage you to book your ticket nice and early so you are not disappointed on the evening. Our next question is Dari on LinkedIn. How difficult is it to get an approval to develop 6 2-bedroom flats on land that previously had an approval for 5-bedroom HMO house? Could the application ever be declined? Absolutely, it can be. You could be in a situation where you don't get planning permission. Absolutely, that is possible. There's no guarantee. There's no certainty about planning permission. Planning permission can be high risk, and it's really about de-risking it. How do you de-risk it? You have knowledge and expertise about planning. That means you understand what the local authority there wants, what type of planning application they support, what their long-term vision is for that area, knowing the history of that area in terms of what are the neighbors like when an application for something like that goes in, the history of that particular site. Also, just because something had planning permission previously doesn't mean it would still get planning permission today for something else, because things change over time. Planning policy changes as well. So if you're starting out with no experience and this is something you're looking at, I'd strongly advise getting a good planning consultant on your side that you're hiring to help you to do an initial assessment, maybe a feasibility study, to see actually, is it viable? Is it going to work? Is it likely to get accepted? Sometimes you can do a pre-app where you're making an application for advice, which is pre-application advice to the council. Many of them will charge you for that as well. You still need to do the drawings, so the architect needs to put together drawings for you. But what that does, it allows you to start a conversation, a dialogue with the planners, just to understand whether they'd be supportive of something like that. So in short, yes, there's no guarantee that you would get that. You really need to have the right people to help and support you. And architects might be great at drawing what might be possible and having that vision, what might be possible on that site, but they don't always, with all due respect to them, have the experience of what planning policy is. You need somebody that understands both planning as well as the vision as well. And sometimes that might be the same person, often it's 2 different people. So I hope that helps. You've got a question on TikTok about mentoring. How to join mentoring. So, so question from TikTok on mentoring. So my mentoring program really is called the Inner Circle program, and essentially it's a support program. What that means is we're supporting you in implementing your strategy to get the results what you're looking for. It's a 12-month program. It's not for everybody. It's application based. There's details here on the screen just here. If you have a look at that link, that's got some more details. Got a little video about him explaining how it works. We're just revamping it just now as we speak. In fact, we had a meeting earlier today in the office about adding significantly more to the program than we had before as well. So have a look at the page. If it sounds like something might be of interest, fill in an application form. Somebody in the office will get in touch, have a chat with you. And then if we think it's a good fit, we'll arrange for you and I to speak as well. And then we'll see if we can get you started. But just as well as mentoring, we've got lots of training programs we're putting together right now. So if you want some help with the knowledge on how certain strategies work or how to implement certain strategies, the how-to stuff, then again, reach out to us and we'll let you know what we've got coming in the next few weeks. So next questions from Yasser on LinkedIn. Hi, Sad, residential versus commercial. For a high net worth individual who has over 1 million to invest, aim is solely income and not capital growth. I guess you're asking which one would be better. I can only ask that from my perspective. If I was in those shoes, what would I think about? If I'm just looking at the income, I don't really want any headache. I don't want long-term capital growth. I just want the income. Then it's really about your appetite for risk. Do you want to go with tenants that are slightly more risky that might produce you a high yield? For example, HMO. The reason it's more risky because it's much more hands-on, much more work needs to be done in terms of running and operating those properties. So I'm guessing you're not going to want to do that yourself. You're going to have either a team of people or you're going to be relying on agents to do that. And how good and competent are the people around you to be able to make that work and produce that high return for you? And remember, the more people that you have around helping you, you're ultimately increasing your overheads and reducing your profit margin. The flip of that is you go for a commercial property that's got a very good tenant, like a blue chip tenant, and for example, something like a co-op as a tenant. You'll get a fairly low yield, but a very, very safe return on that. So what's that mean? That means that the likelihood of that tenant causing you any problems, not looking after the property, not paying rent, are exceptionally slim. So it's almost like a hassle-free investment. But for that hassle-free, people are prepared to accept a lower return for that hassle-free income, which is why the yield tends to be lower. I.e., you pay a higher price for that less hassle route. So it just depends on your personality, what you would do, what is it ultimately you want to be able to achieve. How much money do you need by investing that £1 million in property? How much do you need out of that to give you what you want? So next question from Adam on YouTube. Hi, Saj, is it too late to do rent-to-rent in London? So rent-to-rent has evolved quite a lot. I think it's about 7-8 years, maybe even 9 years ago since we first got involved in rent-to-rent. And at that time, it was new-ish in the sense that there wasn't very many people doing it. And when we were talking to agents, it's quite a new concept. We were explaining, look, we could take a property on a long-term let. You're not going to have any hassle. It's going to be fairly much a guaranteed rent for the owner of the property. We can even look at it so they've got no maintenance as well, no voids. That's essentially was the proposition. That's what we were offering it. If you did that today, if you rang up pretty much any agent, I expect they'll say to you, is that a rent-to-rent that you're talking about? Some of them will be supportive of it. Many of them will refuse and say, oh, no, we don't do that. We're not interested. It's illegal. It's subletting. Whatever it might be, they've made their mind up about the strategy. And other times, interestingly enough, you'll see many agents that will now do this themselves rather than give the properties to somebody else. So in short, is it still viable? Well, rent-to-rent is viable when you can take a property on and you can effectively re-let it back out for more money than you're taking it on for. And you've got operating costs as well. You might have setup costs to think about. That's what you need to think about. If you can get those numbers to work, it doesn't really matter where it is as long as there's demand for your property as well. It doesn't matter really where it is. So can you do this in London? Yes, absolutely. You can do it in London. Is it more difficult than it used to be? Yes, it's definitely much more difficult than it used to be, but it is still possible. There's still people doing it today, but it is more difficult. There's more awareness. And for everybody involved, some people are more greedy. I'm talking about landlords and agents that want more of the slice, a bigger slice of the pie, which means you've got less to work with. So hope that helps. Let's get our next question. Murtaza on YouTube. How do you refinance your properties and get the chunk of money out? For example, in a BRR strategy, when your annual income is less than what your property is worth. When your annual income is less than the property is worth. Leave that question up for a moment. Let me just absorb that. So a couple of things there, first of all. So your income has got very little to do with your mortgage when you're applying for a buy-to-let mortgage on refinance. I said very little. It doesn't mean it's got nothing to do with it, but it's less important because ultimately it's about the property. They're letting the property. Yes, they're lending money to you as well. So your first one's always going to be more difficult, but your second, third, fourth, fifth buy-to-let mortgage is going to be much easier. That's going to be based on the value of the property and what rent that you're bringing in. It's not really about your income. So if you've got enough equity in the property, and that's either because you've added value to it and improved it, you purchased it for £200,000, you spent £50,000 on it, and now it's worth £300,000 because the work you've done on it, you've improved the value, or because you've done nothing, but you've benefited from time, and over time the value's gone up. You bought it for 200 and today it's worth 300 just because the values have gone up. As you create equity in that property, if you've got at least 25% equity in there, then you can refinance. And once you've gone beyond that 25% growth, whether it's in value add or just because you've sat on the property and the property values and prices have risen, then you can refinance and get pretty much what money you've got tied up in it. You probably have an existing mortgage they can pay off as well. Your existing deposit you would have put on, you'll get out of the property as well. That's not really dependent on your income. The rent needs to be able to support it. So it's important that the rent that you're getting is a decent rent that covers the mortgage payments. And there's different calculators people use between 1.25 to 1.45 in terms of a multiplier. But good mortgage broker should be able to sort that out for you. That's not really it's not really a problem, hopefully. And if you want a good mortgage broker, reach out to us. We can connect you with somebody filling out a form, give us some details, and we'll connect you with somebody we think can help you best in your situation. So our next question, Mr. Juris on YouTube. Hello, Saj. I have a question. Did you have Deal Source training program? If yes, how can I get access, please? Thanks for that. So I've run deal sourcing programs in the past. We are now putting together a new program for 2022. So yes, we will be running new deal sourcing courses. We're not running any right now, but if you're interested in those, certainly reach out to us and we can get some more details to you as and when we release those programs. So we've got a few programs planned. We're going to be doing workshops on finding deals, ideal sourcing, finding money, funding deals, which is absolutely key. Then we've got service accommodation, HMOs, developments, creative concepts, creative control concept, which is one of my favorite ones. That's things like lease options, option contracts, rent to rents, those kind of things, assisted sales, exchange with delayed completions, where you're controlling property rather than purchasing it to make money from it. So those are the workshops we've got planned for the next few months. As I said, we had a meeting earlier as well in the office with the team, mapping out which programs we'll be releasing when over the next coming months. So just reach out to us and we'll let you know about those. So next question on TikTok from Ibs Doctor. I have got a 6-bed house with 6 toilets. What should I do to rent it out but can't find any people? So if you've got a 6-bedroom house with 6 toilets, I'm assuming it's a HMO and you want to rent it out, but you're struggling to rent it out. So there could be many, many reasons why you're struggling. It could be the type of people that you're looking for don't want that kind of property. So for example, let's say it's in an area where there's mostly students. And right now, most of the students are partway through their program. They're not really going to be changing and finding tenants, a group of tenants right now, students that want to take on a property of that size is difficult because they're not looking. So sometimes it can be that simple that the people you're looking for to come in as the tenants are not looking for that type of property. So then you've got to think about, okay, what else can I do? Sometimes it could be the price, that what you're asking for is too high for the type of people that will take that kind of property. These are really the basics in terms of why you might be struggling to let the property. Location is not something you can do a great deal about. It is where it is. You can't pick it up and move it. So you've got to think about who in that area would rent that type of property. Now, making it back into a family house may not be that attractive. Cost of conversion could be quite high. Seems like a bit of a waste if all that work's already been done. But of course, it is going to be demand driven, that there has to be some demand for what it is that you've got that you want to let. So let's get our next question up then on the screen then, Khalid. This is from Harry on YouTube. If you were starting from scratch and had 40K, what would be the first thing you would start with? So what I would start with is I would understand sourcing in terms of how can I go and find good deals. That's the first thing I would learn. I'd really understand what is a good opportunity, how do I find them, and then how can I package and sell those to other people. Now you might be thinking, well, I want to start building my own portfolio, I don't necessarily want to sell, but what that does do is a number of things. Firstly, it gives you the skill to be able to find deals, because you've got to find good deals. Secondly, it starts connecting with people who might be buying those deals from you, and you'll be starting to earn some money, and that can help build your pot as well. Because it could be 3, 4, 5 grand. If you've sold a couple of properties at 5 grand, that's 10 grand. So all of a sudden your 40 grand pot now jumped to 50 grand. So that's important. And thirdly, and what I think is quite important as well, that you'll also be speaking to people who've got funds who might end up wanting to do something with you rather than purchasing a property from you. So just by learning how to source, I think that's a key skill. I'd also then learn how to find money and raise money so that you can increase your pot. So even if you tie up money, what you're going to do then, once you spent your 40 grand, are you just going to sit on your hands, or you're going to want to do more? If you're going to want to do more, how are you going to raise more money? So you've got to think about, how can I be attractive to investors to want to work with me and invest with me. Then the third thing I would do is learn creative control concepts. This is what I was talking about earlier on, the kind of strategies where you get control of a property rather than ownership necessarily. So you can use the money, some of the money that you've got, to improve properties, to add value to them, either to create cash flow from them or to improve them and sell them on. For example, like an assisted sales strategy or a rent-to-rent strategy. There are just so many different ways to do that. That's been some of my favorite strategies. And the reality is that's pretty much been my journey. I learned how to find really good deals, and I started learning how to raise money. I started doing a lot of creative stuff, and then from there it stemmed on to many, many other different things. So in a nutshell, that's where I would start. In fact, I'll be doing a video on YouTube very soon talking about, if you're just getting started, what the different ways you can start. So make sure you look out for that as well on the YouTube channel there. So our next and final question, I'm told, is...
Are you ready? Ready?
What's the question? Oh, it's a big one. From Adil on Facebook, I need help. Actually, I bought a property. The estate agent found tenants for me as well. I asked the estate agent to provide details of the potential tenants, including their references and searches, but the estate agent said that's confidential and I can't see those details. Is that right, estate agent hiding something from me? Because my question is, I'm the landlord, so I should get those details to confirm, and in the case of rent arrears, so my rent arrears insurance does not cover the rent and legal evict.
I assume it's tenant at the end.
Etc. So you get a general gist of what you're saying. So essentially, Adil, what you're saying is that you're purchasing a property, the estate agents find you some tenants, but they don't give you any details of the tenants. Personally speaking, I'd tell those tenants to, the agent to go and get stuffed, because I think it's unreasonable. But you do have to look at the terms and conditions you've signed up to with that agent. We run an agency as well, and we think it'd be ridiculous for us to be able to find a tenant and not give the details to the owner of the property, in terms of them making sure they're happy with them, the way they're vetted, what documentation that's been put together, what essentially what the approval process has been for that individual. So I would not accept that, Adil. I'd go back and say that's not the way I work. If they're not going to provide that, you're going to move on to another agent and get them to find the tenants for you. So that'd be my personal view. But as I said, it depends on what you've signed up for and what the arrangements is, because whenever you instruct somebody to work for you in that way, there'll be some kind of terms and conditions associated with that. So that just leaves me to say thank you so much for taking your time out and joining me on a Monday. I appreciate you taking time out of your busy diary. Hopefully this is useful. As I said, we'll be running a lot more events, in-person events now. We're so excited that we've got the relaunch of the property meeting has happened. We've got lots of other events planned. Reach out to us if it's something you'd like to attend, you want to learn from us, you're looking for mentoring, support. And of course, if you want to invest with me as well, reach out to us as well. With investing with me, it tends to be a minimum of £50,000 for lending money for projects, and for partnerships, it's £350,000. So
investor link. Sorry.
Investor link is just across the screen now if you're interested in getting involved in investing with me. So thank you so much, and I shall look forward to seeing you back here next Monday at 8:30 p.m.